Hello again, everyone. I hope you're all doing really well. So it wasn't just my apartment that experienced some seismic activity yesterday, but so did my trading account, as I think I had perhaps my trade of the month, which would be a contender for trade of the year. Courtesy of our old favourite Marin Software, ticker symbol MRIN, which yesterday jumped up to $10.88 at market open, representing a jump of about 95% at its peak, before settling down and finishing the session at $9.21, or a still very impressive 62% higher on the day. The catalyst for the rise is the news of the renewal of their ad revenue sharing deal with Google, aka Alphabet. Marin was one of the stocks that I had piled money into on Monday during the Evergrande market scare, bolstering my already over 500 share position by a further 400 shares at an average price of $5.34. I have actually said the company I think has a lot of promise even after the mania around the Instacart short squeeze. So in this video I want to have a little bit of a look at the stock and dissect the announcement as well as go through my intentions with the stock going forward. So let's get into it. So as you can see, yesterday's trade rocketed the stock out of the trading range I had established for the stock between $5 and $6.20 in the aftermath of the June short squeeze, where it reached an all-time high of around $27. So we're nowhere near that territory at the moment. So by me managing to sell the majority of my 900 shares in the first hour of trade above $10 netted me a nice profit of close to $5,000, which about half can be attributed to my purchases on Monday. The stock did manage to have good support around the $9 mark through the session. However, there has been a bit of a more downward correction in the market, with the stock shedding almost $1 in the low volume session to finish at $8.31. Perhaps a sign that traders are coming to grips regarding the reality of the financial implications of this recent announcement. And I also think there will be a continued downward movement for the stock in the coming sessions, as I think the market has perhaps again overpriced the stock, which is not surprising given the huge volume that the stock saw yesterday and the fact that it is a tiny market cap stock, which before yesterday would have been below $100 million, therefore subjecting it to some very dramatic price moves as we've seen in the short squeeze and yesterday. This explosion in price was perhaps further buoyed by the good macro news, with some positive developments coming out about Evergrande agreeing and arranging to pay some of the bond interest they owed, as well as perhaps the more relevant and, for the case of Marin Software, important news that the Fed is at least for now continuing to steer the course in terms of their bond buying program, which gave the markets greater confidence yesterday. Back to the technicals for Marin Software, I have for a while believed that the stock has a true value that is closer to the $7 mark, as indicated by this blue line, a price point which it had struggled to get to post the short squeeze effort. To me, I don't think the announcement with Google actually represents any material improvement for the stock, and I think this is going to be realised and be the catalyst for eventually bringing the stock price back down. I believe that in the near-term future, there will likely be a trading range for Marin Software, possibly between the $6.20 and $7 range, especially once the reality of yesterday's news catches up with the market. That is, of course, barring any other future news that may come out from the company in the meantime. When the stock gets back to this $7 mark, I think I will be looking at moving some of the profits and proceeds from my trade yesterday back into the stock. The rest I will be looking to add to a stable dividend stock in my portfolio, as a regular cash flow is part of my broader investing strategy. Looking at other technical indicators, there is further evidence of more correction on the horizon. When we look at the oversold conditions in the RSI that lasted throughout the entire Wednesday session, and the fact that the stock, even on an hourly chart, spent most of the session outside of the Bollinger Bands and never once touched the moving average. Now on to the news yesterday, and as to why yesterday's announcement is a bit of an overreaction for the stock. The Google deal is literally just a renewal of a deal that was in place since 2018 and was set to expire at the end of this month. So while it is good news for the ongoing operations of the company, and it was something that they had commenced negotiating a few months back, it does not materially mean any improvement to the business's operations. However, it does give customers a greater degree of certainty and confidence about the Marin One platform. And to put it into further context, the renewal doesn't even feature as news on the Marin Software investors page, aka the company's website, which is perhaps a further sign about the lack of material financial implication this deal actually has for the business. With a small market cap business like this, and given Marin Software's recent history, I think it is always worth having a look and discussion around the short starter, which really was a feature for the stock about 3 months ago. At present, the stock wouldn't be considered highly shorted, with only 9.25% of the outstanding float currently shorted, especially when you consider the textbook 10% as the marker of a highly shorted stock. However, I wouldn't be surprised if we see a little bit of a rise in this figure, as the stock will perhaps come under some more pressure as it tries to recorrect its stock price following yesterday's huge rally. If this downward pressure does get too crazy, the stock could again find itself having the right conditions for a potential short squeeze, but at current I do not believe that is the play. We have to keep in mind that Marin Software, while having a healthy balance sheet, has not posted a profit in some time, and I think fans of the stock are going to be more anticipating the next set of quarterly earnings, which will be due out in late October or early November, more so than what the implications of a renewal of an advertising revenue deal with Google represents. Anyway, that's about all I have for this one. What do you guys think about my valuation of $7 for the stock? Do you think it's a fair one? Do you think we are going to see a continuation of the upward movement in the stock throughout the rest of the trading week? Let me know in the comments below. Until next time everyone, may the markets trade in your favour. Cheers.